What an excellent article from Silver Doctor's chart behind me, as you can see this puppy over here. Glenron stock is rolling over again. You know, Enron and then Glencore. Glenron is back. After a hearty dead cat short cover bounce, Glencore, aka Glenrod, stock appears to be headed quickly south again. Submitted by PM Fund Manager Dave Kranzler. After a flurry of rumors about debt buybacks, asset sales, and possible buyouts, it looks like the reality of gravity has gripped Glencore's stock again, as Glencore's stock bounced up to its plunging 50-day moving average and quickly headed south again. A lot of unfounded assertions and articles written without factual references have surfaced. So I did a quick drive-by view of Glencore's financials and recent presentations to get some truth. To begin with, 36% of Glencore's operating income is derived from copper. Here's what a long-term copper chart looks like. He shows a chart. And he says, copper appears to be headed back down to its low in 2008, by the way. Um, and he's showing the chart, and it's definitely going down. So if that's the case, and Glencore's main bread and butter is from copper, to begin with, 36% of Glencore's operating income is derived from copper. So as copper goes, so does Glencore, amongst other things. You know, their book cooking that accounting practices. Can't wait for all that to come out. I don't know about anyone else, but it appears to me that the global economic conditions are headed back down to where they were in 2008, 2009, and probably even lower. That implies that the price of copper has a lot further to fall. Another 17% of Glencore's what they call EBIT, which is their operating income, is derived from zinc, nickel, and coal. All three commodities are close to or at very long-term lows with no bottom in sight. I think it's fair to say that the downside risk to Glencore's cash flow is greater than the likelihood of upside potential at this point. As for Glencore's debt load, in the latest management presentation, management stated that one of its goals is to maintain a quote, strong investment grade rating. They must have that investment grade rating by the rating agencies. This made me laugh, he says. Why? Because Glencore's debt rating is triple B flat. This is 2 downgrades away from being considered junk. Original reports were that Glencore had net debt of 29 billion at the end of June. But let's examine the truth before we become poised or poisoned with propaganda. As it turns out, Glencore was carrying 50 billion of funded debt at the end of June, which is bonds plus funded credit lines. And he shows a little graph. The graph above is from Glencore's first half financial report. As you can see, the 29 billion is derived by netting out Glencore's readily marketable inventories. It's a number used by Wall Street's snake oil salesmen and their financial media propaganda vassals like Steve Leisman, Joe Laverna, Jim Cramer, etc. If these inventories are readily marketable, then how come Glencore does not readily sell them and pay down this debt? Because the answer is that the inventory consists of copper, zinc, nickel, and coal, all of which are in abundant supply with falling prices. The net debt number is therefore highly misleading, and the real debt level is 50 billion, which means that Glencore is a de facto junk bond credit rating, waiting to happen technically because it's going to happen probably any day now. As an aside, the other day some dweeb from BlackRock, E.V. Hambro, announced publicly that he backs Glencore's big debt reduction plan. Of course he backs it. BlackRock is the fourth biggest holder of Glencore's stock and undoubtedly one of its largest non-bank creditors. Tell me, Evie, If Glencore's plans are executable, why don't they start by raising $17 billion from the readily marketable inventory? Readily means you can sell it all into a deep market bid right now. $50 billion in debt on top of what will likely be about $8.5 billion of EBIT and likely about $2.5 billion after capex for all of 2015. Glencore's debt level, in other words, is 20 times cash flow after capex. This is a staggering ratio. It is likely that Glencore's cash flow will continue to decline along with commodities prices and the economic contraction in China. Glencore has thus entered the realm of the irreversible debt spiral. I remember the Enron saga vividly because I was short the stock from about $42 down to where it bounced, at which point I covered, and after the bounce was over, I reshorted Enron until it went below $10. I'm not suggesting that Glencore is going to be completely incinerated the way Enron was, but there's certainly a lot of questionable events behind the curtain that covers Glencore, going all the way back to the time when Glencore existed as Mark Rich's commodity trading company. I would suggest that anyone who might be exposed to the stock or the debt of Glencore should get out of the way, because Glencore certainly does not pass the smell test. Couldn't agree any more than that. I mean, every day there's some new data, whether it's another one of these rotten carcasses of a financial institution being brought back into the spotlight with more problems, more debt, more issues, worse numbers, worse quarterly results. I mean, if it's not one of the same ones, it's a new one. And for each of these that you've heard about, can you imagine how many we haven't heard about yet? This is why I can see what Lindsey Williams said. If it's written on a piece of paper, when this whole market system goes bye-bye, if any asset you thought you had is written on a piece of paper, it won't be worth the paper it's written on, is what he was told. And he was told very recently, because he did the video, a little while back, all commodities are going to be going down. Everything's going down but the price of food. He said that. He said that a while ago. Is he right or is he right? He's right. Commodities are all going down, he said, except for food. And by God, he's absolutely right. Food has not come down, yet all these so-called commodities everywhere have come down in price. I'm looking at I didn't post it in this video, but I'm looking at the chart of what, from 2003. I mean, Matt, let me just hook a brother up. Stand by. It's only take a second. Let me switch this baby out, or just add this other one. Hang on. There it is. Let's make it a little bit bigger. Get rid of that. And this is from, look, 2003. Look how low copper was. And again, it's the same time you can look at precious metals. $3-4 for an ounce of silver. Oh my God, right? And then it goes up. Then we have the 2007-8. Look how high it is. Big crash of 08-09. You see what happens there in the middle. Goes back up. And what do you see from 2011 on down? 2012, 2013, 2014. It's just, yeah, it's doing this, but it's down. It's a downward set of stairs. And if this is Glencore's primo income, copper, things are not looking good for Glencore. And the same can be said about their little buddy, Trafigura, and some of the other ones. They're in just as bad a shape too. Because the same thing that the club's been doing in the Middle East, squeezing them by dropping the price of oil. Anyone that's in the commodities that built their company and everything about their company up with certain prices, Now all of a sudden, it's just like you making $200,000 a year salary. Oh, living great off that salary. Of course, I have a nicer house than you. I've got a nicer car than you. I've got maybe more cars than you. I also have a boat. My house is a big piece of property. 200,000, it's accounted for. In other words, you may have $100,000 a year salary, certain size house, certain size cars, et cetera, et cetera, et cetera. Essentially, we both have the same issue. We're living maybe right at our means, most Americans above our means. Let's just be nice here and say both of us, 100,000 earner, 200,000 earner, we are living within our means. Not by much, but definitely within them. So my salary 200, I could survive. I got a little bit extra money to spend over. You with your 100K, same story for you. And then all of a sudden, whatever my thing was that gets me my $200,000 a year, again, this is made up. I'd love to earn a 200K, just so you know. All of a sudden, something that my company heavily relies on for profit goes down the tubes. It's still there, just gets crushed. Oh, prices are way low, man. Whole company has to take a pay deduction, which means me, CEO of this fake company, has to take a pay deduction whether I like it or not. Which means what? Nice big old house, big old yard, big old boat, big old car. May have to start liquidating. If things don't turn around soon, because I got credit cards and I'll max those suckers out first. Because I'm sure the market will turn around and my business will start booming again. So I'm going to max these suckers out. And by the time I'm done maxing them out, my debt load, which was a certain level that I couldn't afford because the prices got smashed for this thing that my company relies on, but I bought time with the credit cards. And now I'm owing money on those too. Robbed Peter to pay Paul. And now the dang market got even lower on this item that I need for my company to make money. And I have these credit card debt payments that are unsustainable because I have that on top of my house and everything else there. My my salary's been cut by force, of course. And now what? Now it's time to file bankruptcy. So that doesn't happen in a matter of days. This little process, does it? No. So the first we heard about Glencore was 3 weeks ago, maybe a month ago. I don't know the exact timing. 3 weeks, 4 weeks ago. This is brand new, and look how much trouble they're in. Look at their stock getting crushed, and look at the dropping prices of copper. What did Goldman say? We see if commodities come down even 5% from where they are, Glencore is finished. That's what Goldman Sachs says. Vampire squid extraordinaire. They're probably licking their chops. Can't wait. We're gonna pounce on that company as soon as there's blood on the streets. Oh, we're gonna do a capital raise. We're gonna raise some capital. You ain't gonna do jack. As you said, if you got all this marketable stuff, what are you waiting on? Get rid of it. You said you had it. Just sell it now. What? Oh, wait, you don't. Or what you might find out is, well, what we said we had is actually future production we don't have yet. But through slick accounting maneuvers, it looks like we have it right now. Okay, so you don't have it. No. Can anyone say Enron? I think that's why this is a very good headline or subject title for this post on Silver Doctors. Glenron is back. Glencore and Enron. Glenron. I love it. Take care.